Hello and welcome to another session of the Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP-Invest, and today we are here to talk about NAUKRI. Today we want to discuss an opportunity which we identified right at the close of this talk, right at the low of this talk, and I want to show you, first of all, how did I identify the opportunity? Second of all, what was the execution that we did, including trailing stop losses. Now, every Wednesday, we cover one stock where we discuss the practical side of the trade setup in great details because it is the execution where a lot of people lack skills. See, analysis it's the execution that really makes money for you. So if you want to learn the nitty-gritties of how to build your position and how to set your stop losses and how to revise your stop losses, how to trail your position so that your unrealized profits don't turn to unrealized losses or don't just evaporate, you need to know how to do things practically. The knowledge which I'm sharing in the Let's Get Technical series is something that I've garnered over 12 years of practice. And the idea of sharing this knowledge with you is to shorten your learning curve just by a little bit. So this is the NAUKRI chart on my trading view. I will take you to the 75-minute time frame and a little bit back in time. The trade setup, so this is a 75-minute time frame. And the trade setup that I specifically want to discuss with you is this one. So I had identified an opportunity in NAUKRI for my Trade Together program members on the 8th of March. And this was near the level of 3483. If you see before, NAUKRI had just come down from a massive correction and it was hovering very close to this previous support zone. But there were other things which were indicating that the stock was heading for a reversal. And this trade setup was exited here, all right, at this yellow pin. And then you can see that NAUKRI is a stock that we enter and exit multiple times. And this is a very attractive candidate for swing trading specifically. So this particular trade setup, you can see we entered around 8th, 9th of March and we exited around July. So over 4 months of, I would say, holding period was witnessed, and we made around 28% profit, which I think is a pretty good performance. The stop loss of this position when I had posted it to the members was right below this low, because I was betting on a reversal, a bottom reversal. So naturally, if a new low gets forged, it means that the stock is still in correction. The reason why I had the conviction to in the first place was that the stock was going to reverse and start a new bull trend. There are multiple reasons. We'll build the investment case as we cover all of them one after another. Most important thing is that when I took this trade setup, I knew what my target and what my stop loss were going to be. So my stop loss was right below this low and my target was right at this high of 4870. And my target has been achieved even though my position was exited a little bit soon. We'll start from the weekly time frame and we will judge our entry. So I'm going to let this be here because this helps us identify where we executed trades. Now you can see on the trend line, firstly, the maiden trend line and all the other trend lines have been drawn. And you see what these trend lines do. The purpose of drawing the trend line is to make sure that we are in the direction of the trend. We are always trading in the direction of the trend. What happens is when we go multiple time frames lower, for example, I use monthly, weekly, daily, 75, 15, 30, 3-minute. Obviously, all of them don't contribute at the same time for all stocks in my decision making, but each of them plays a very important role when the time is right for them to contribute. The idea of the trend line is that I always want to trade a stock in the direction of the primary trend. Right? So if a stock is in a predominant bull trend and multiple time frames give similar signals, which I call the terminology, which I have coined a terminology called eclipsing for that. So eclipsing is basically a phenomena where you see the same kind of signal appearing on multiple time frames. And when this phenomena happens, firstly, it's very difficult to spot because you have to look at the stock at the right time at the right place. So I am building a very holistic system with lots of scanners, a whole toolkit to make sure that I don't miss such opportunities. But in order to catch the moments of eclipsing as they happen in the stocks, the first thing that we need to assure is that we are always trading in the direction of the trend. When you go multiple time frames lower, it becomes very hard to know what the broad trend of the market is. That is why when I draw my trend lines, I always draw them on the higher time frames like monthly or weekly, and then I clone the maiden trend line, the main trend lines that I've already drawn with a single slope on the smaller time frames to match them or represent them again on other time frames. So sometimes I do end up drawing too many trend lines. All I have to do is time to time refresh the trend lines, clean up the charts. After having drawn the important trend line, what we can see is the stock is in a predominant bull trend. But lately, especially since the October of 21st, the stock had taken a massive correction of 53%. What happens is in my watch list of 100 stocks, I keep a tab on stocks which are turning out to be bottom reversals. See, at any point of time, all 100 of my stocks are not good for trading. But there are times when a stock becomes very active for continuous swing trading. Why? Because it is coming out of a bottom. So now I can expect that the stock will deliver at least 3 or 4 strong impulse waves before it goes into a major correction. And the understanding of the concept of Elliott wave theory really helps me in planning my swing trades like that. So if you're interested in becoming a good swing trader, I suggest you take some active interest in Elliott wave theory. And after this session, in fact, I will be sharing the PDF of Elliott wave principles book, through which I personally have also learned Elliott waves, in my Telegram channel. So if you're interested in getting the PDF of that book, make sure that you join my Telegram channel right away. I'm dropping the link in the comments for you. Now, the stock had already come down and forged a low near the level of around 3,300, 3,400. And what we could see that, okay, there is something very interesting, and I want to build my investment case at this point of time. On the weekly time frame, we do not see anything interesting other than the fact that the predominant bull trend is bullish. So we'll keep that aside. But on the daily time frame, something very interesting is popping out at us. You see this blue line. So this thick blue line is nothing else but the 200 EMA of weekly time frame approached. Why is it on the daily time frame? Because I have superimposed it just like that. So if we just go back to the weekly time frame, here, this is where we identified it. So we started monitoring the stock for an entry in the March of 2023 back. When the stock came around October is when I started, and then I monitored the stock very actively. Why? Because firstly, the stock had taken support at the weekly time frames 200 EMA. 200 and 500 EMA are very important EMAs when we want to do swing trading. So the stock, after a major correction of almost 50%, has taken support at the 200 EMA of the weekly time frame, given a strong bounce back. And then you can see in the cluster of EMAs, the 50 and the 100 EMA specifically, the stock again took resistance, came back down, and took some support again at the same moving average. I started monitor to see whether the stock goes above this EMAs or the 50 and the 100 EMA, or whether it does not. Because it did not give a closing, and because it took resistance and then fell down again with high volumes, we did not go forward with the position back then. Instead, what we did was we waited for the stock to come back down to the support level. The next support was this, basically the 200 EMA on the weekly time frame. But when the stock approached it, it also broke it with high volumes. That meant that I had to look for the next support and determine what the stock was going to do. So the next support was naturally the previous low. Our interest basically peaked in the stock when the stock came to test the 200 EMA weekly time frame. It broke it briefly, but it did not continue to rally, continue to decline. In fact, if you take a closer look here on the daily time frame, you will see that when it broke the 200 EMA on weekly time frame, came down and then reversed, this reversal saw very strong volumes. So we will add this point to our investment case. Now, another point that we noticed, so this bounce back happened. Our interest was peaked when the stock approached the 200 EMA of the daily time frame, because I had an alert set for that back then. So stock approached 200 EMA on daily after a few weeks, but it did not sustain in my monitoring stage. So often you will see on the top left corner of my charts with a slight fade out, there are going to be some texts written in super shorthands. Those are my notes which I build on every stock in my watch list, because it's not possible for me to remember at all points of time what I had analyzed the previous time. And if I don't maintain notes, what is going to happen is I'm going to have to do the entire analysis and face the risk of missing points that I had observed earlier. I want to keep a note of the important points as they happen. Here we saw that the stock took resistance, but it still experienced pretty high volumes on the consolidation phase itself. For my long-term portfolio, I had started accumulating the stock here. Now, for the long-term portfolio, the stop loss is naturally a lot bigger. I can go as high as 25% stop loss for the long-term portfolio. But as far as my short-term portfolio is concerned, that is the swing trading portfolio, I prefer to keep my stop loss less than or maximum of 5. Now, coming back to the swing trading setup. The stock here came back down to the weekly time frames 200 EMA, and as you can also see on the daily chart, we did take a entry in the stock with a very small target of around 4364. This was an intermittent entry that we made in the stock, and we did make a profit of even 15.6% here. Again, we tried to enter the stock when it retested the low, but we got stopped out with a mere 4% profits. The real entry, the solid entry, came soon after. You see how I have already played swings twice in the stock, where the stock by this point of time has already created its real low after the major correction. In the next upswing that followed, because there are multiple strong EMAs, that is the 200 EMA of the weekly and the daily time frame, and the volume activity is suggesting strength on the upside. Not only that, if you look at the RSIs, already started shifting back to the bullish range. Now, all of these things combined, presence of important EMAs, that is 200 or 500 EMAs, presence of RSI positive divergence on the important time frame like the daily, and subsequent positive range shift and the volume showing positive signals on the upside, all of these things combined gave me some confidence to go ahead and pursue short-term bullish position in the stock, which resulted in a consolidating stock, first a 14 or 15% profit and then around a 5% profit. So 20% profits in. What happened next was this. The stock again went back down, and like I said, it broke below the 200 EMA this time. So this was a signal for me that I need to now wait before getting aggressive in the stock, and I had to wait for the stock to achieve the next support level, which was 3465. Now again, when the stock came close to the support level, this is what I noticed. Bounce back from the next support, which is marked as the green zone, saw strong volume participation. You see these two green bars on the volume. This is the MACD volume. It compares the 20 days average volume with the past 100 days average volume. And what I noticed was that when the stock bounced up from this level, it saw massive participation. This again reminded me of the previous time when the stock had come close to the same level. There again, I had seen massive participation. So what this told me that this green zone is basically a very attractive buying range for probably institutions, because only institutions have the muscle power to move such quantities of a stock that it impacts the daily time frames, 20-day average volumes to such an extent that we see such huge candles. So naturally, I also wanted a piece of that cake. I gave a recommendation to my members of the Trade Together program to buy this stock right here. So you see, for this one little timely entry, I started monitoring the stock since October, made 2 quick entries for just making some quick bucks. But because I know that this stock has a tendency of giving massive returns, I did not let go of the stock and I continued to keep my hold on this. Now let's come to entry and setting the stop loss. Now that I knew that I was ready to make my entry, in the 75-minute time frame, what you will notice is a strong positive divergence had forged when the first low of the stock was formed. And since then, the stock had already moved to the bullish range. What do I mean by the bullish range? You see, the lowest price that RSI touched is here. What price does this correspond to? It corresponds to this price. Why? Because the momentum of the decline is super strong. Now what happened? The price forged a low here, but the RSI settled somewhere around the level of 40. What this tells us that now the momentum has shifted. The upside is happening faster than the downside. This shift in momentum is what RSI picks up. Think of a car. If you want to judge whether the car is going to go forward or going to go reverse, you're going to look at the car and you're going to judge the speed. Naturally, when a car is going forward, if it wants to start reversing, what it will have to do first is go forward slower until it stops and then decelerate. Same thing happens with stocks. You can literally look at stocks, think of it like it's on a vertical scale and it's trying to move up and down. The reason why we are seeing charts like this is because we are capturing every single move of the stock. If even for the car's momentum or even the car's speed, if you take the data of that speed and you plot it, it's going to look something like this only. Before it reverses, it's just that in case of the car, what you're going to see is going to be more like this. Acceleration, deceleration, stop, reverse, and then this is more likely what you're going to see in the car. In case of stocks, we see the same activity, but there's a lot more noise, a lot more volatility, which makes it harder to predict. But the math or the basic logic is the same. So in this case, the reason why I depend so heavily on the RSI is because it catches those subtle changes in the way prices are moving, or the change in the subtle changes in the momentum, which us in like way in advance that a reversal is going to come. Of course, it is susceptible to giving us fake signals also, but if we use proper measures of risk management, we can avoid them. So on the 75-minute time frame, what we saw was the RSI, being a lot more sensitive, had already moved to the bullish range, whereas the daily time frame had just forged the proper RSI divergence a lot later in October. So RSI gave a positive divergence in June itself. RSI on the 75-minute time frame gave the positive divergence and positive range shift in June itself, whereas on the daily time frame, the same signal came in the month of October. Now, going down one more time frame to the 15-minute chart. So even on the 15-minute time frame is even more sensitive than the 75-minute time frame. So what it does is that whenever there is any turnaround, even a 10-15% turnaround in the market, it will give you positive and negative divergences. Like for example, here you can see that the stock forged a bit of a base, but the RSI here has given a massive positive divergence. And then we see that the RSI signaled a super bullish range. How did it do that? the RSI basically went above the level of 60, 70 and sustained for a pretty long time. One thing that I always remind myself is that if a stock gives a sharp movement on the upside after a massive decline, don't trust that upside, because there's a lot of pessimism with respect to that stock. There is a anchoring bias that exists in the market, which means most of the people who bought the stock and probably at the low and are experiencing some profit are very likely to book their profits and get out, especially after a sharp spike in the market in the specific stock. Why? Because they're still anchored to the recent price decline that had happened few months ago. So that is the reason that whenever I see a sharp spike like this in the market, I start trailing the stop loss very close, or I look at the 3-minute time frame for the first sign of negative divergence or anything negative to get out of the stock. So that's what I did with NAUKRI also here. Next, when the NAUKRI stock again came back down to the same base level, it was clearly time for me to re-enter. Why? Because the 15-minute chart had established a bull range and the RSI was back at the level of 30. See, the level of 30 and the level of 60, the level of 40 and the level of 70 play a very important role when it comes to judging the momentum of the stock. Again, when we came around here, we saw the RSI of the 15-minute time frame gave a superb positive divergence. Again, you can see this marked with the white line here. We again trailed and we got stopped out. So I was expecting this turnaround to be a little bit more sustainable or at least retest the previous high, but that didn't happen, as a result of which my trailing stop loss got triggered, which is totally fine as long as I didn't lose any money. But then again, look what happened when our ultimate entry point came. Look at the RSI. It gave a massive positive divergence around here. What you will notice is this. So compare these 2 points. Okay, this is where the positive divergence actually became very visible. So this point and this point. See, there is a middle spike which went down. That's fine. We can ignore it. When we are trying to trade on the 75-minute and the daily time frame, right? Tiny little breaches of the 30 level can be ignored on the 15-minute time frame, as long as there are low points which spell out a positive divergence. And this was a bit of a complicated concept, which even I am still wrapping my head around as I practice technical analysis on a day-to-day basis. What I've realized is that as long as the price has forged a lower low and the RSI has forged a higher high, it can be considered as a positive divergence. Okay, just make sure that the points are not too far apart, because then it loses its viability. This is the point where eclipsing happened. How? The 15-minute time frame, the 75-minute time frame. See, look here again. The 75-minute time frame and the daily time frame all signaled bullish. How? The daily time frame is well above the level of 30. 75-minute time frame is showing positive divergence. 15-minute time frame is also showing positive divergence. This was a clear-cut signal that it's time to make a fresh entry with a stop loss right below, few points below the previous low. Okay, so we made the fresh entry. Now let's come to the 75-minute time frame and start trailing the stop loss. Vinay is asking, can you tell me the indicators that you're using? So Vinay, the indicators that I use are very basic. It is RSI and moving average. But what really matters is the strategies that I deploy with them. So for RSI, I use RSI on multiple time frames with multiple settings. For example, on the daily time frame, I use RSI with 20-day period. With 75-minute time frame, I use 25. For 15, I use 25. For 3, again, I use 25. For weekly, I use 14 period. When it comes to the moving average, the two key moving averages that I use are 200 and the 500 EMA on all time frames. And on the 75 daily and the weekly time frame, I also prefer to use the 50, 100 and 20 EMA. So 20 EMA only on the daily and the weekly time frame, not on the 75 also. So honestly, it is not about the indicators that I use, but how I apply them. And how I apply them is a more exhaustive or a more elaborate topic than these 30-minute webinars. If you are interested, then I would like to invite you for my advanced technical analysis training program, which I again post regularly about on my Telegram channel. And in that, I will cover 24 sessions of 2 hours each, one session every weekend, where I come live and interact with the participants and teach them my methodologies through screen share. I go all the way from teaching you the trading view setup that I am using, all the way to what to observe, to giving assignments, checking your responses, and making sure that your understanding aligns with my understanding. See, I don't know everything in the world of technical analysis. I've just scratched the surface, but the little bit that I have managed to scratch out gives me wonderful results through swing trading and long-term investment. There is also a reminder from the ET moderator that I would like to mention on this note, that if you want to do swing trading with me, you can sign up for my swing trading plan listed on GapUp. GapUp is a platform where all SEBI registered research analysts list their services for you to choose from. How you should approach this platform and how you should assess all SEBI registered analysts is basically read the methodologies, read what they're offering, and judge for yourself whether the offering and the methodology makes sense to you or not. I personally only work in the swing trading space in equity markets. If that is something that you're interested, you might want to click on the link shared by the ET moderator and subscribe. Coming back, let's quickly begin with the trailing of our stop loss. And I thank you so much for liking this session. If you haven't, hit the like button right now. This is the first stop loss that we set somewhere around here, not exactly, but somewhere around 3264, naturally because of the low. Now, once we set the stop loss, the next most important task is to identify the resistance above which, once the stock goes, we need to revise our stop loss. Naturally, the previous high becomes the most recent resistance, and you will see that here the stock gave a little bit of breach but then came back down. The reason why I believe that the stock came back down is this presence of the 200 EMAs, the daily time frames 200 EMA. It acted as a resistance. So when we are setting stop loss and trailing our stop loss, it is very important to remember that when your position is still new, you need to keep a massive buffer between your entry price and your stop loss level. If you don't keep a pretty big buffer and if you don't optimize your entry price, then your risk reward ratio is going to be low, and even a good trade setup will not qualify for entry. So I maintain a risk reward ratio of minimum 3, and until and unless, no matter how attractive a trade setup looks, until and unless I'm getting a risk reward ratio of minimum 3, I will not go for it, no matter how attractive the charts look. So initial stop loss set, initial resistance identified, we wait for the stock to sustain above it. The first signal that we get, the first couple of alerts are fake alerts. Why? Because the stock tests the resistance but fails to breach over it, which is a signal to us that you need to keep waiting for the stock. Another thing that is very evident is the 200 EMA of the 75-minute time frame has also come into the game. So you see the importance of the 200 EMA. On the weekly time frame, it gave support to a price that was crashing hard, 50% down, and the 200 EMA on the weekly time frame gave support. Then came the 200 EMA on the daily time frame. When the stock tried to come up prematurely, it gave resistance, patted the price back down. Then what happened? The 75-minute charts 200 EMA caught up, and when the 200 EMA patted the price down, the 200 EMA of the 75-minute time frame patted the price up. It gave it support. So when the stock sustained above the 200 EMA of the 75-minute time frame, this was a pretty good signal for me that it's time to revise the stop loss even before the resistance got breached. I work a lot with TradingView's alerts. Thankfully, TradingView has increased the number of alerts that it now gives because I always run out of alerts. But here, when I saw the alert get triggered twice and then again on the 200 EMA of the 75-minute time frame, it was a good enough signal for me to revise my stop loss, at least up to my cost. Why to my cost? Because even if this trade setup fails, even if the 75-minute EMAs, 75 minutes 200 EMA gets breached, I at least don't want to lose money on the stock. So when evidence made sense, I went ahead and revised my stop loss to the cost. Soon enough, this resistance was breached and the stock turned up. Now, when this resistance got breached, we need to identify the next resistance, which is naturally the very previous high that was forged, which is somewhere around the level of 3980. Now, again, you will notice is that the stock tested this resistance twice. Again, it came back down to the 200 EMA of the 75-minute time frame. See, in technical analysis, you've heard that history repeats itself. This is exactly what they talk about. Stock took resistance twice near the previous resistance, came down, took support at the 200 EMA of the 75-minute time frame, went up, again took resistance, came down, again took support at the exact same EMA, again started to go up, right? So when this happened the next time, again it is cue for me that I need to update my stop loss. So where do I update my stop loss? This time I will take my stop loss right where the previous low got forged. Basically, right where the stock took the first support at the 75-minute charts 200 EMA. Okay. So now my stop loss has moved from 3,500 where my cost was to 3,600, meaning that even if this trade setup fails, as of this point, I'm going to make at least 100 points profit. What happened next? We have to identify the next resistance. So let's go back. And from what I can see, this peak looks like a pretty good point to set our next resistance at. So again, the same story repeats. The stock took resistance at the level that we identified, which is also to say that the levels of resistance that we are identifying are pretty accurate, because every time we set the resistance level, and this takes practice, and this is also why you want to work with a limited watch list of stocks, because the more you practice, the more intuitive it becomes for you. So again, the resistance level was tested, but this time, if you notice, the stock did not come back all the way down to the 200 EMA, which is a signal of strength. This time, the stock came down just to the 50 EMA. Big progress from 200 EMA support, 50 EMA support in an upward trending market, meaning that the momentum of the stock is improving. So the stock took support at the 50 EMA and started to turn back up and finally breached the resistance. When the stock breached the resistance and established support at the 200 EMA, this was super encouraging for me. So now I know that I can revise my stop loss in a big way. This time when this resistance got breached, I revised my stop loss from 3600 directly to 4000. So you see, initially when we are revising the stop loss on a fresh position, we are being very conservative. But once the momentum has proved itself, we go all out. Now we are ready to trail our stop loss in a much closer manner because we don't want to miss on this major rally which is unfolding. So where we were praying to just not lose capital or sufficing with 3% profit, from 3% profit, we've directly jumped to 15%, 16% profit. And honestly, if you want to make big returns in the market, you need to first determine that the stocks that you choose to play in, where you choose to allocate your very limited capital, are very strong trade setup. That is, they offer you risk reward ratio of more than 3. So see, 3 is the minimum risk reward ratio, not the maximum. Huge difference between the two. And at the same time, when you start trailing your stop losses, don't be very aggressive. And this I'm telling you from a very big pain point, because whenever I do my past trade analysis, I see that I identify such good trade setups, but the reason I don't make massive profits is because I get stopped out too soon. So I am right now on a daily basis working on setting better stop losses myself and exiting stocks at better level. So all this knowledge that I'm sharing with you about stop loss and trailing stop loss, there is a selfish reason for this. When I teach you about it, it acts as a very good revision for me. So when I am actually in the arena and I'm actually in the center of action, my own words come back to me. The 200 EMAs, this stop loss, that level resistance, do this marking, set this alert, it all comes back to me. That's the reason why I do this so passionately. But coming back, so you see, now we have already locked in 15 to 16% profit on our position. Now we continue to do the same trick, that is identify the next resistance. So the next resistance is this peak. And you can see multiple resistance, multiple times the price took resistance at this level. Extended, this becomes our next resistance. So when the next resistance gets breached, that is near this level, what we need to do is we revise our stop loss again. So where do we revise our stop loss? The very previous low. But one more thing, again, I have learned over my practice, is there is a tendency for the stock to come and retest the previous high. When I'm setting my stop loss, I don't want to get too close to this high. I want to stay a little bit lower than it. Especially if there were multiple resistances near the same level, you will see some sort of consolidation zone. Place your stop loss a little bit below that consolidation zone to safeguard it from whiplash or these sudden corrections like this one over here. Okay, so what happened here again was the resistance got breached, but the stock came back down to retest the previous resistance and then went back up. Now, when the stock went back up, that is, here it breached the zone, it took support here, and then it went back up. Naturally, we need to identify the next resistance zone. In addition to that, we also need to keep a side eye on the volume activity and the 75-minute time frames RSI activity. If you look at the volume activity, you will notice that the upside is now not experiencing, we are here, this part. In this part, if you notice the upside, here big candles got formed on the upside, but look at the volume. The volume is not as strong anymore. So this is a little bit of a warning sign that the momentum might be getting exhausted. Moreover, if you go down to the 15-minute time frame and analyze the same part, the 15-minute time frame will also tell you the same story. Where the RSI was going as high as 70, 80 and sustaining above that, now if you will see, the RSI is not bearish as such, but it is not going higher than 70 anymore. It is taking resistance at 70. This doesn't mean exit your position, but this does mean that the momentum is getting a little bit exhausted. So when we had to identify the next resistance, or what I personally do right now, which this may not be correct because now we are entering the zone where even my strengths are not fully developed yet, but I'm working on it. What I do here is the next resistance that I identify, I try to keep it not very far. Maybe a few points up, maybe 1.5, 2% higher, but not more than that, because now I'm reaching a position where I would like to retain my profits. Why? Because the XIRR is very attractive. In very few days, I have made a massive return. I don't want to lose out on that XIRR. As a result of that, I set a resistance level somewhere near there. And once it gets breached, you can see that this resistance also coincides with the peak after which this previous resistance was breached. So basically we wait for a new high, and once the new high gets set, I wanted to set my stop loss, and this time I was setting a stop loss to potentially get out of the stock. Why? Because the 75-minute time frame had given a negative divergence on the RSI, and I was like, okay, if it falls below further, I want to get out. What I have learned, and this is very new realization which I have come at after analyzing maybe 200 past trades, what I've realized is that there is no need to get very scared when you see a negative divergence on the 75-minute time frame, because even with a 75-minute time frame's negative divergence, I have seen the stock has a tendency to give at least one or even two legs of upside. So this negative divergence came, right? But after that, what I noticed was that the stock went ahead to achieve the original target which I had set on the stock, which was 4. And this is a theme that has repeated over and over again for me in the Trade Together program recommendations also. So even though we are able to capture attractive returns, what I'm seeing is that a lot of return is getting missed out. And by doing this past trade analysis and discussing these trades in details with you, I try to etch these very minor points in my own brain so that when I am doing my trades, I trade better. So basically, because of this little realization that was still yet to be developed, I got out of the stock prematurely at the level of around 44.50, after which the stock did continue to rally for quite a bit. It rallied nearly 12% more in the next 1 month. So I'm going to have to take your leave. Thank you so much for joining this session. Please do join me in the next session on Friday in the Market Outlook series, where I will bring to you Nifty's Bank Nifty's analysis along with intersector chart analysis, and we will see where the momentum is headed so that we can plan our capital allocation for the weeks to come in a better manner. In the last few Market Outlook series, I have discussed pharma, I have discussed realty sector, metal sectors, bank sectors, which have subsequently gone into rally. So if you're interested in knowing about momentum in the market from a forward-looking perspective, do join me at 5 o'clock on Friday. Again, small reminder, don't forget to join me on the Telegram channel for the Elliott Wave book, which I will be sharing the PDF of right after this session ends. Thank you so much for listening to me. Do and share this video with your friends. Namaste.